Have you also invested your money in Paytm shares? If yes, then this video is a must watch because Paytm has released its Q1 numbers. Many investors often think that quarterly results are technical and can be skipped, but if you are an investor, then you are also a shareholder. And as a shareholder, you must take note of all the quarterly results of the companies that you are invested in. So without wasting any more time, let's take a look at Paytm Q1 numbers. 197 Communications, which runs the payments platform Paytm, has reported a consolidated loss in the June quarter. The loss has widened to 838.9 crore rupees versus 357 crore rupees in the corresponding quarter of the previous financial year. Paytm's Q1 revenue has gone down to 1502 crore rupees, which is around 36% year-on-year decline. The number stood at 2342 crore rupees in Q1 FY24. The company said that its revenue and EBITDA before the ESOP loss of 545 crore rupees is in line with the guidance provided. Paytm, in a regulatory filing, said, "We expect revenue and EBITDA before ESOP to start improving from Q2 FY2025 on account of growth in operating metrics and cost optimization." Q1 FY2025 ESOP cost was lower at 247 crore rupees on account of ESOP lapses at the time of employee separation during the quarter. As part of its goal to save 400 to 500 crore rupees annually on employee costs, it has achieved a 9% reduction sequentially. The net payment margin was 383 crore rupees with payment processing margin above 3 BPS. No UPI incentives were booked during the quarter as it gets paid in Q4 of the financial year. Financial services revenue was 280 crore rupees with a majority of loans from the distribution-only model. Marketing services revenue was 321 crore rupees, lower than last quarter mainly on account of the seasonality of the events business. In Q1, the payments revenue was 900 crore rupees, which was impacted due to the disruption of PPBL products, temporary impact on account of a conservative approach taken for certain businesses, and temporary disruptions in operating metrics or MTU, merchant base, and GMV. New merchant signups, which were hit after regulatory trouble, are now reaching January 2024 levels as well. The daily average GMV, excluding disrupted products, has also shown consistent improvement during the quarter and is almost back to Jan 2024 levels. Paytm said its monthly transactional user or MTU base has stabilized at 7.8 crore rupees, while engagement of existing customers is increasing, which is reflected in increased customer GMV. Paytm expects the merchant subscriber base addition to reach a normalized run rate by Q3 FY2025 as seen in FY24 before the directive on PPBL. As per Paytm, subscription revenue per device has bottomed out in Q1 FY2025 and is expected to increase on the back of new merchant signups, reactivation of merchants, and redeployment from inactive merchants. The value of merchant loans distributed during the quarter was 2,508 crore rupees. According to 197 Communications, about 50% of loans distributed are to repeat borrowers. The average ticket size has increased to 2,25,000 from 1,90,000 a year ago. Average tenure of 13 months is also there. Penetration for merchant loans is 4.4% of device merchants. Well, that is all for today. Stay tuned to ET Market for more.